Dear students and working accountants, welcome to my Expert Tally Prime YouTube channel. My name is Babu Rao from Hyderabad. Today, in this video, we are going to learn how to see the how to see the registers of subsidiary books or registers in the Tally Prime, as well as what is the difference between ledgers and registers. That's what we're going to learn. Before entering into the topic, a request to you. Many people entering the channel and watching the videos and going off without subscribing to the channel. So now I request everyone to subscribe to my channel. If you have not already done, you can subscribe only once. If you have already done it, it's okay. Otherwise, don't forget to subscribe to my channel. And after that, next to the subscribe button, there is what you call bell icon. Click that bell icon and select all so that you will get notification for all the videos which I upload in my channel, and then share my channel with everyone. Okay, and now, and another most important thing is everyone, please view the video till the end. Don't skip in the middle. If you skip in the middle, you will know and understand the topic or subject only. The topic you will understand only up to that point. The remaining part you cannot understand. You don't know. That is why it is like a what you call half knowledge. It's a waste of time also. That's why please watch the video till the end. See, you are going to the college at BA, BSc, BCom or any degree. It is a academic qualification. So you are getting an academic qualification in the college. For that, we sit in the college every day for 2 to 3 hours every day. But here we are learning where here it is Tally Prime software professional training. This is very, very useful for our career and for our life. That is why please spend time for this also. So every video will be around 40 to 50 minutes maximum. Otherwise, less than 1 hour. So we have to spend that time and we have to watch every video till the end. Then only you will get the full knowledge of the topic. For every topic, in every video, there is one topic. So every topic, you will have full knowledge only. You will gain full knowledge. That's why please watch every video till the end. After watching fully, if the video is good, please like the video. If you like the video, the YouTube people, they will share this video with many people so that many people will have the chance to learn this topic. Now we will enter into the so our you will enter into the topic here. See, we make entries in every company. We make entries in every company, all types of entries: contra, payment, receipt, journal, purchases, sales, debit note, credit note. All these entries will be made in every entry. So how the entry will be made in the voucher? In the voucher. So if you make the entry in the voucher, so that will be automatically posted in the ledger, in the ledger, in all the, and the ledger masters. It will be posted in the ledgers, that is all the concerned ledgers. What are the ledgers used in the journal? In all the ledgers, they will be posted depending on the debit and credit. They will be posted. In the case of normal, manual accounts, we enter all the entries in one book called journal. In journal, we will make the entries. From the journal, we will post in the ledger in the concerned accounts. But here, automatically, here we won't use one book. That is, we will not post, enter the transactions in one place. So they will be entered they will be entered depending on the nature of the transaction in different vouchers. So after that, that voucher entry will be posted in the concerned ledgers. Automatically, they will be posted. So their journal and post in the ledger. And here from vouchers, what you call voucher type, we will enter. From the voucher, automatically it will be posted. It's okay. But in the annual accounting, instead of entering all the transactions in one journal, we will maintain different journals. So we'll divide the journal, one journal, we will maintain different journals for different nature of transactions. For purchases, a separate journal. For sales, a separate journal. For receipts to payment to bank accounts, for a separate journal called as cash book. We will maintain like that. So directly we will enter in them and post it. We won't enter in one journal. We won't enter many journals. That call many journals we maintain. They are called as subsidiary books. Many journals we maintain. They are called as subsidiary books. We enter in the subsidiary book. From the subsidiary book, we post in the ledger. If you maintain only journal, from journal we make the entry. From journal we post in the ledger. If you don't maintain one journal, if you maintain many different journals called as subsidiary books, if you maintain, we enter in the subsidiary book. From the subsidiary book, we make the reposting in the ledger. But in the case of this one, we won't maintain one journal. Not all the transactions are recorded at one place. In different vouchers, we record the transactions. So they are called as vouchers. And after entering into the transaction, in the transaction, we use different accounts we write. With different ledgers we use in the transaction. Because all these concerned ledgers, automatically the posting will be made from the voucher. The posting is made in the ledger accounts. Okay. But here, in addition to this, so only two places, journal, the case of normal, manual accounts, journal to ledger. Otherwise, no journal. Subsidiary journals are subsidiary books. Subsidiary books, we make the entry. From subsidiary books to journal, to ledger, we make the entry. But here, we make entry in the voucher, and from voucher, automatically the entries are posted in the ledger. In addition to that, this from the voucher, the subsidiary books, we are calling them here, the subsidiary books are also automatically created, but they are called as not subsidiary books, they're called as registers. So we make entry in the voucher, so automatically the entries are posted in the ledger, and the subsidiary books called as registers, they will also be automatically created. So two places, from voucher, one is posting to ledger, and another one is posting in the concerned subsidiary books called as in the concerned registers. So how they will be posted here? Here, first we will see how this will be posted in the ledger. First of all, see, for example, we will take up, see, all these we have only this one. Okay, only one entry, receipts, payment, journal, or contra, only debit, credit. This is nothing but is a debit account is debited in the journal, and in the credit account we post in the automatically posted in the credit side in the ledger. Okay, and the debit account is debited in the ledger, and the credit account is credited in the ledger automatically. But in this case, in the case of purchases, sales, and returns, that is purchases, sales, and purchase returns and sales is called as debit note, credit note. In these cases, there will be different amounts. So in the journal, one account debit, one account credit. But here in these vouchers, so there will be different amounts in the voucher, which is recorded as the transaction is recorded. So here we will take up, for example, we will take up sales. We will take up sales. If we take up sales, you see here. No, not this one. We will take up another one. We'll take up purchases. So see here, we will take up the purchases. See here, this is debit note. This is purchases here. See, for example, anything like that, Krishna Computers you are taking. So it is on June 1st, Krishna Computers. Okay. So we have made purchase. In the purchase voucher, entry is made. Automatically, this entry is posted in the ledger. How it is posted? See, in the voucher, see on the top, the party name, debit account, credit account. Debit account and credit account. One is party name, another one is purchase. That is, purchase account is debited. When you purchase the goods, purchase account is debit, party is the giver, party account is credit. So this purchase account and party account are shown. Party account is credited, credit, and purchase account is debited. That is implied. Purchase account is no debit and credit shown. Purchase account is debited, party account is credited. But how it is credited with the amounts means here there are three types of amounts here. First one is all stock items, the respective amounts, and the total of the stock items. So the value, basic value of the stock items and the total of the basic value, this is called as taxable value. On this, we calculate the tax. So one amount is taxable value. So total of all the stock, individual stock items, the total is taken as the total taxable value. So one amount is taxable value, and then taxes GST. If it is local state, CGST and HGST, they separately 50%, 50%, half. So both will be mentioned entered here. So both CGST and HGST. In the case of interstate transaction, there will be only one tax in one component called as IGST. So after the taxable amount, taxable value, then GST. Simply it is called as tax also. So GST will be there. GST one amount, IGST, or two amounts, equal amounts, CGST and HGST. This is the second one. And then the taxable value plus GST, totally that it will be shown at the down. The total amount is called as invoice value. This is the invoice. This is called the total value or invoice value. So taxable value, tax, and invoice value. So three amounts: taxable value, taxes, and invoice value. These three amounts will be posted at three places. That is, first of all, this is the goods we are purchasing. So here the taxable value will be posted in the purchases. The goods is purchased. So the taxable value of the goods is posted in the purchase ledger. So this is total amount 3,10,000. Purchase ledger means purchase ledger will be debited. Purchasing goods, it is expense to us or goods coming to us. So purchase account is debited. That purchase ledger is debited with taxable value. So when you purchase, we are paying the tax. That tax is to be recovered. That is, we will get ITC. That is called, it is an asset to us. That is why we are purchasing its input. It is called as input tax. So we will pay input tax credit. So input tax credit is also we have to get from the government. It is a asset. That is why that is also debited. So the tax will be entered on that side. Which side is the purchases or sales? If in the case of sales, sales will be credited. GST also will be credited because sales means income to us. It is credited. When you collect the tax, you have to pay to the government. It is a liability, so it is a credit. So sales credit, tax credit. Purchase is debit, tax is also debit. So purchase account is debited with the taxable value 3,10,000, and the GST will be debited with the respective amount. CGST 27,750, SGST 27,750. If it is IGST, totally 55,500. 55,500 total amount is debited to IGST account. So purchase amount, taxable value, tax is debited to two different accounts. So purchase account and taxes debited, and total amount. So these two are posted on the debit side, one purchase account and taxes account, two places. This is one place, this is one place posted. And the total invoice value, this is payable to the, including total the taxable value, tax, everything. Total amount is payable to the supplier. So the total amount is credited to the Krishna Computer. He is a supplier, creditor. His account, the total amount is credited to him. So debit purchase account, debit CGST account, debit SG account, or debit purchase account, debit IGST account if there is one. The IGST account to debited and credit total amount credited to Krishna Computers. See here how it is posted. We can see in the ledger. First of all, how you will see in the ledger? Actually, from here itself, you can go to the ledger. We can see without closing this window. But actually, first of all, generally how you will do is in the gateway of Tally, we will go to display more reports, means D. Display more reports. The short key is D. Display more reports. Then all the ledgers will be in the account books. So A, account books. Then D, A. Display more reports, account books. Then ledger L. So DAL. We go to the first. We will take up purchase. If you take, you see Krishna Computers on June 1st, total amount, Krishna, this is purchases. Purchase account is debited with the taxable value 3,10,000. 3,10,000, that is the credit account. Debit is purchase, debited to see debit side. Debited 3,10,000. One debit. Another debit is tax. So in this case, go back. So here, CGST, if you take, see, Krishna Computers, June 1st. Krishna Computers, June 1st. No, this one, sorry. June 2nd, sorry, June 2nd. It is the sales, no, not sales. Purchases only. So in this case, purchases, CGST, Krishna Computers on 1st June only. Yeah, this one. So on 1st June, Krishna Computers, so CGST, this is credit account. CGST debit on 1st June, so 27,750, and SGST also, if you go, so SGST 27,750. So party account means purchase account debit 3,10,000, and the CGST, SGST both differently, each 27,750. All the three are debited. Then total amount is 3,65,000 something. The total amount is credited to the party. Who is the party? Krishna Computers. So if you take Krishna Computers, go to Krishna Computers, see purchase on June 1st, 2,65,500 rupees total. So purchase is debited with taxable value. Taxes are debited with the respective tax amount. Total invoice value is credited to the party account, the creditor account. This is about the purchases. Similarly, then you will go back just to check it up. Escape. Sorry, no, we have closed. We came out. So we came out. We have to check up like this. Otherwise, here in the 2nd June, that is Krishna Computers. This one, in this entry itself, here itself you can check up. Here itself you can check up. How you will check up, that we will take up in the case of sales. So these are posted. Debited purchase account with 3,10,000. Debited CGST 27,750. Debited SGST 27,750. All the three are debited. Total amount is 365 is credited to Krishna Computers here. In the sales, we will check up the ledger from here. Okay. Like this, it is showing. Now we will take up one sales. We will take up sales. For example, Rangarao data. Venkateswara Enterprise, 2nd June. See, on 2nd June, we will take everything you can check up, but I am checking a selective figure to show total V. So here, it is sales account. If you go to sales, so here, Venkateswara party account is there, sales is there. Here in this case, when I are selling, party is a debtor to us customer. So party account is debited and sales is income. It is credited. These two, sales credit, party account debit. Here also, the items are there, each item amount and the total amount. This total amount is the taxable value. These are the taxes and this is the invoice value total. But here, taxable value is credited to the sales account. Only taxable value. In the purchase also, sales also. In the sales account, we have to debit the total value of the total taxable value, credit to sales account, and tax is collected and payable to government liability. So HGST and CGST or IGST is also credited to the respective ledger. CGST, HGST separately. Otherwise, on the IGST, total amount 11,664. 11,664 will be the IGST. So that is credited to the respective tax amount. Sales account credit 65,200. Respective stack of stamp amount, tax account credit, this one. These two are credited, sales and taxes. And the total invoice value 76,864 is debited to the party. So from here you can see, here you see. So Alt G, see on the top, go to, it is there, the short keys, Alt G, click there, go to, or on the keyboard, you say Alt G. So here it all will come. Whatever you want to do here, it will. So creating masters, altering masters, creating a voucher, everything done. But here, these are all reports. This is the work to be done. These are the reports you can see here. So generally, most commonly used reports are given here, and at the down, many headings are given. So in each one, we will have some, in each head, we will have some reports. Each head, we will have some reports. Okay. But and these are all given in groups. whatever you want, you can move. Here, these are all most commonly used. They are given separately. But what we do now, we have to go to the ledger. What you will see in the ledger? In the ledger postings. That is, in the ledger, we can find the vouchers. The voucher is posted in the ledger. So in the ledger, we have to see the entry. Entry means voucher. In the ledgers, we have to see the vouchers. It is given here. You see, ledger vouchers. If you go to ledger vouchers, like all the ledgers will be shown. So in this, what you want? You want sales account. You want sales. Go to sales. See here, Venkateswara Enterprises 2nd June, 65,200. It is the taxable value. 65,200 is the taxable value. Okay. And then say sales is credited. Tax is also CGST is credited. See here, Venkateswara 2nd June, Venkateswara Enterprises 5,832 CGST. Similarly, HGST also, if you check up, HGST check up. See, Venkateswara Enterprises credit. Sales is also credited. Sales is credited. Taxes are also credited. 5,832 sales ledger, sales voucher type. In that voucher you entered. So this is the voucher type. Party name is this. So sales account, SGST, CGST are credited. Okay. Now the total amount will be 75,000 change. That will be debited to the party. Who is the party? Venkateswara Enterprises. So if you do Venkateswara Enterprises, see, on 2nd June, it is debited sales. 2nd June, it is debited 76,864. So it is debited. So sales account credit, taxes account credit, SGST, CGST credit. Otherwise, IGST credit, and the total amount invoice value will be debited to the party. Please don't see this. This is the other account. Party is debited means other account is credited means sales account is credited. In the debit account, we show the credit account. In the credit account, we show the debit account name. Okay. Like this, we will see in the ledger. So similarly, these things also. Escape. We came back to. So after from here, if you go to Alt G, go to after seeing the reports and everything, click escape. See how many steps you are going. So many times you have to click escape. We will come back. If you go one step only. If once you click escape, you will come back. Like that, I clicked the escape key. Then we came back to the, from here only we went there. Went to the Alt G, the go to function we used. So here we did. Like this, we can view the ledgers. The ledgers postings will be made from the vouchers. Ledger, this is the voucher. So from this voucher, the concerned accounts, in the concerned accounts, the posting will be made. So depending on the debit gate, sales is debited, sales is credited, and Venkateswara is debited. Sales debited with taxable value, sales are credited. Sales is credited with taxable value. Concerned tax is also credited with taxable value. Total amount is invoice value. Invoice value is debited to the party account in the case of sales. In the case of purchases, taxable value is debited to purchases, and taxes are also debited to the concerned taxes. Total invoice value will be credited to the party in the case of purchases, like this. Similarly, same in the case of debit note, credit note also. So debit note. So in the case of debit note, see here, this is the tax, only one item. This is the taxable value. These are the taxes. This is the invoice value. So here, Krishna returns outwards. This is also called purchase returns. Purchases are debited. Purchase returns are credited. So these purchase returns are credited with the taxable value 32,000. Purchase returns 32,000. That is returns outwards 32,000. When the returns outwards means purchase debit means purchase returns credit. When your purchase returns are credited, tax is also credited. When you are purchasing, we are debiting purchases, debiting the tax also. But when you are returning the goods, the return goods are credited and the tax is also credited. Tax is also to be reduced. So purchase returns, that is return outwards, credited 32,000. CGST, HGST also credited. The total invoice value will be debited. When you are purchasing, is giver. When you are returning, is the receiver. Total purchase invoice value will be debited to Krishna Enterprises. That you can see here. From here you can go. See Alt G. So here Krishna Computers on date 1st June. Krishna Computers debit note. Krishna Computers you will go. Now here from here what you do is go to Alt G. So here the same ledger vouchers will go. So Krishna Computers. Previously we saw this one. These are the returns. So returns outwards means purchase returns 37,760. So in the Krishna Computers account is total amount is debited 37,760 taxable value plus tax. Total amount is debited to the Krishna Computers. Now returns outwards. See, returns outwards. It is going out. Returns outwards is created 1st June. See, Krishna Computers, the 32,000 is the taxable value is created to returns outwards. Tax is also created CGST, HGST on 1st June. Krishna Computers 2080 debit note 2880 purchase returns 2880 it is credits are not purchase. SGST CGST is created with 2880 and SGST also will be credited with 2880. Purchases debit, tax debit, party credit. Sales party debit, sales credit and tax credit. Similarly here in the case of returns also just opposite. Purchase return is going out. Purchase returns credit, tax credit, party account debit. In the case of sales returns sales returns is debited with taxable value and sales returns is debited and tax is also debited. Party account is credited. When you are selling is debited. When he is returning, his account is credited. Like this, we post this automatically. This voucher entry will be posted in the respective journal. So in this account and in this account, these two ledgers and here these two ledgers. These are our stock items. The total amount will be posted in the purchases and the ledgers will be posted. So these two are ledgers. These two are also. These are not ledgers. They are only details of goods. They will be credited or they will not debit credit. They will be updated in the stock reports. There will be no debit or credit. What is the stock? Stock reports, it will be updated. If it is purchased, it will be increased. If it is sold, the stock summary will be reduced. So this is about this. But what about this is when you make the voucher entry, it is automatically the respective ledgers in the ledger, all the respective amounts will be posted in the ledgers directly, immediately, instantly. But it will create the registers also. What is the register means? Subsidiary books. In the subsidiary books, how they are also called registers. The same subsidiary book, sales book, it is called there. Sales book. Subsidiary book is called sales book manual accounts. Here it is called as sales register. Okay. How you can find the registers? Ledgers you can find, display more reports, account books, ledger. We can find the ledgers. But here where you will find the registers? So same thing, we'll go to display more reports, account books. So ledger are going. See, these are all summary, cash book and ledger summary and group summary and group vouchers. These are all summary reports and registers. These are all the registers. We have F4 contra, receipt, payment, journal, purchase, sales, debit note, credit note. Totally 8 vouchers, most commonly used vouchers. See here, you see 1, 2, 3, 4, 5, 6, 7, 8. All 8 registers for each type of voucher. One register will be created. So in this case, these registers will show the transactions monthly wise. So monthly report for each month, what are the transactions? So monthly wise they will show, but in this case, so only sales and purchase registers, monthly total amount will show. So these two registers will show monthly total amount. So total of all the transactions in that month. The total amount it will show. If you click the total amount, it will show the details of the vouchers. So here, sales register, if you click, see here, this is for April to 2nd June. Okay. Here, this is for the month of April. Sales, this is sales register means it will be always credit. Sales April, this is the amount. May, this is the amount. June, this is the amount. So these are the different amounts. They will discuss the total amounts, that summary, total amounts for each month. So if you click that one, you will know all the vouchers. And this one, if you click, you will know only one voucher. If you click that, you will know all the vouchers, all sales vouchers. This is the sales report. This is called sales register. All the sales vouchers will be shown. These are all sales vouchers, but in the sales register, it will show the total amount month-wise. Similarly, for purchase list also, it will show purchase means debit. So purchase list will show on the debit side. So month-wise amounts. So this is for April. If you click that, you will know the voucher wise. That is the details of the vouchers. And for May, there is no purchase. And if you go to June. So the total amount it will show. If this is the total amount, you see, 2173,800, 21,73,880, and the details of the vouchers will be shown with individual amounts, individual vouchers with amounts. And here, month-wise total it is showing. So in these two cases, they will display the monthly amounts. They will display the monthly amounts. If you keep a month amount, it will show the details of the vouchers. All other, this is the thing, that's all. And here, how it will show means these amounts, the total here in the ledgers, sales account, purchase account, everything, and it will show the respective amounts only, not total invoice. Invoice prices will be, invoice value will be shown in the party account only. So here, in this case, in the sales and purchase vouchers as well as debit note, credit note also, sales purchase returns, sales returns. So in this case also, it will show the total invoice value, not this is sales ledger, sales register. It does not, it will show only sales value. It will show the total amount. There, sales account will show ledger. Sales ledger will show only the taxable value of the sales of a voucher. But here, it will show the total invoice value of that voucher. Here you see, here, Venkateswara Enterprises. This is sales. So 2nd June, total amount, see, if you click that, if you click these amounts, again you will see the voucher. See here, total amount is shown 76,8864. 76,8864. It will show. It is 1,30,000. If you see the total amount, there is no tax here. The total invoice price itself is, total invoice price is 1,30,000. Total invoice price is 1,30,000. Here also, we can show the tax also here. If it is not entered here, so PG, sorry, they are not registered, but here these computers, the values are not given, it seems. And LG, this is also, the rates are given. Okay, LG TV, but CGST, it is not calculating. It has to calculate. Something happened, because once you do it correctly, everything will be correct. If you do in different times, you do different things, there will be some problem like this. Okay, but it will show the tax also. It is taxable. These are taxable stock. Okay, and these two are taxable items, and this person is also. In the case of sales, registered, unregistered, composition, consumer, to everyone you sell, we collect the tax. To everyone we can sell in any place. We can sell either local state or interstate. You can sell. We can sell to anyone in any place. In every case, we will collect the tax. So that's okay. Like this, it will show. But here, Excel traders. So in this case, also computers are there. And here, Excel traders. This is also sales. All these are sales. They will show the total invoice price. In these cases, tax is not entered still, but the total invoice price. In this case also, tax is not shown. But in this case, tax is also not this one. This one, tax is also added. So total invoice price will be shown. So in the registers, total invoice price will be shown in total for each month. Month-wise, it will show the monthly report. If you click that amount, you can see all the vouchers. If you click a voucher, we can see the voucher. So like this, we will see. So this is about the subsidiary books called as registers in Tally Prime. Automatically, when you enter a voucher, the respective accounts will be posted in the ledger. In the ledger, all the respective accounts posting will be made. Similarly, simultaneously, immediately, the registers are also created there in the ledger. In the ledger accounts, respective amounts only will be posted. But here, the total invoice value will be for party only, total invoice value. Other ledgers, respective amount. But in this case, only total invoice value will show. So in the case of this, account books. So in this case, and all other registers, they will show only month-wise number of count, voucher count. See here, it is showing this is total vouchers. So it will show only vouchers. One voucher in April and one voucher in June. If you click that, the details of the vouchers will come. Only one is coming. Here, if you click this, the details of the voucher. If you click that, the voucher will be shown. And similarly, anything here, if you go to payment, so it is showing two. Click two payments, it is showing. And if you see receipt voucher, if you go to the receipt, here four are there. If you click all the four vouchers, then only numbers will be shown. In the case of all the other contra, payment, receipt, journal, debit note, credit note, for all the vouchers, only the number of the vouchers will be shown. And if you click that, then only the details of all the list of the vouchers will be shown. And if you click the voucher list of the in a particular voucher, if you click, then we will see the original voucher entry. We can see the voucher. Okay, we can see, click any transaction voucher. If you click that, we will see the voucher. These are all the transactions. So like that, but it will display only month-wise number of vouchers. At a voucher count, it will display. Then if you click, you can see that. So this is about the registers and ledger postings. In the ledger, how it will be posted. Simultaneously, it will create subsidiary books also. There we will enter the subsidiary books and make the posting. Here, if you will make any case, we make the entry in the voucher only. So automatically ledger posting will be completed. Automatically this registers also will be created. But in the registers, total value, in the ledger, the respective amount will be posted. Okay. So this is about the ledgers and ledgers, how to see the ledgers and how to see the registers in Tally Prep. With this, I close this. Wish you all the best. Good night. We'll meet in the next video. Bye.